As the US-China trade war cools off momentarily, the US is scrambling to lock in a critical ally in the Middle East, Saudi Arabia. Remember the mess from the last administration? Biden's visit to Saudi Arabia was anything but smooth. Instead of a warm welcome, Crown Prince Mohammed bin Salman greeted him with a fist bump. Awkward. Then there was that bold US threat increase oil production or face consequences. Spoiler alert, nothing happened. Now Trump's back in the region, working to mend ties with two big goals in mind. First, he's looking for cash. America's hungry for investment dollars. Second, and just as critical, he wants to push China out of the Middle East. That's a massive challenge. And here's why. The US is running low on allies in the region. But Saudi Arabia remains a friendly face, partly because they want something from the US too. Welcome to the transactional world. Trump's all about displacing China, though that's a tough sell. In 2024, China was the biggest buyer of Saudi oil, snapping up 1.6 million barrels a day. Even with slightly lower volumes, Saudi Arabia is China's second largest crude supplier, and oil makes up 80% of China's imports from the kingdom. For Saudi Arabia, cutting ties with China, their top customer, would be financial suicide. Their trade with China is a goldmine, delivering a $30 billion surplus in 2023. That's huge for a country grappling with persistent fiscal deficits. China's edge? An insatiable demand for energy. As Beijing shifts away from US oil, its ties with Saudi Arabia and the Middle East are only growing stronger. Trump's America First agenda sounds great, but it means buying less from the world and making more at home. So why are the Saudis even entertaining the US? Well, MBS just inked an economic partnership with America, boosting ties in mining, energy, and defense. It's a classic Middle Eastern playbook. Do business with China while squeezing what you can from the US, especially in an unstable region. But Trump's not just there to charm. He's got big asks for the Saudis too. So, why is he in Riyadh signing deals with the Crown Prince? Let's break it down. That Saudi Arabia will be investing at least $600 billion in America. But I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them. The US is in a high-stakes race to dominate AI and maintain its technological edge over China. But funding this ambition is a massive challenge. President Trump is reportedly seeking a jaw-dropping $1 trillion from Saudi Arabia to help bankroll this effort, a clear sign of the fiscal constraints gripping the U.S. economy. Meanwhile, U.S. bond yields are creeping higher, with the 10-year Treasury note nearing 4.5%, a level not seen since before recent global tensions began. Just months ago, it was steady at 4%. This rising yield trend signals trouble as the government struggles to raise funds without external help. Tensions with China have eased somewhat, but market jitters are pushing bond yields up, inching us closer to the panic levels we saw in April. With inflation fears resurfacing, any move by Treasury Secretary Besant to flood the market with bonds for subsidies or direct investments could backfire. The recent Consumer Price Index, or CPI, report offered some relief, but a bond tsunami risks reigniting inflation, potentially causing the dollar to wobble or even crash. The U.S. is walking a tightrope. It desperately needs foreign investment to keep its economic engine running. Unlike China, which can lean on domestic support, the U.S. has little room to maneuver. Enter Saudi Arabia. During Trump's recent talks with the kingdom, rumors swirled about a massive Saudi commitment, $600 billion in U.S. investments. That's a staggering leap from the less than $10 billion Saudi Arabia invested in 2023, a 60-fold increase. But let's be clear, this isn't a done deal. These are pledges, not signed contracts. Trump's goal is to channel this money into U.S. jobs and GDP growth, but that hinges on private companies making independent business decisions, not government mandates. If Saudi Crown Prince Mohammed bin Salman, MBS, taps the kingdom's sovereign wealth fund, this could become reality. Otherwise, the $600 billion might just be hot air. Saudi Arabia is grappling with its own financial woes, running consistent deficits since the third quarter of 2022. In the first quarter of 2025, they posted a $15.7 billion deficit, their largest yet. And that was before April's oil price crash, which likely deepened the hole. Some speculate Saudi Arabia did Trump a favor by pushing OPEC to flood the oil market, driving prices down to curb U.S. inflation. But that move slashed their own oil revenues, putting them in a bind. To keep operations running, Saudi Arabia is issuing more bonds, but they're already stretched thin. Borrowing $1 trillion to fund Trump's vision? That's a tough sell. The kingdom has its own ambitious projects, with nearly $2 trillion earmarked for economic diversification. Billions are flowing into resorts, tourism, and industrial cities like Oxagon, while upgrading existing ones like Dubport will cost over $100 billion. Then there's Neom, the futuristic desert city and economic zone, carrying a price tag of at least $1.5 trillion. Every dollar Saudi Arabia sends to the US is a dollar not spent on these homegrown initiatives. Private companies might have more wiggle room, but even that's uncertain. Earlier this year, the White House floated the idea of a U.S. sovereign wealth fund, and Trump signed an executive order in February 2025 to explore it. Whether this can bridge the gap remains to be seen. For now, the U.S. is banking on foreign cash to fuel its AI ambitions. But with Saudi Arabia's own priorities and deficits, Trump's trillion-dollar dream might be a long shot. This is an executive order. This charges your Secretary of the Treasury, Scott Essent, and your Secretary of Commerce, Howard Lutnick, to begin a process that will hopefully result in the creation of an American sovereign wealth fund. It's a very exciting event. We're going to have a sovereign wealth fund, which we've never had. We have a lot of things that create wealth, and you've seen that over the last 2 weeks. I think we've created more wealth. Building a sovereign wealth fund like those in China, Norway, or Singapore is a nice idea, but it's practically impossible for the U.S. right now. Those funds are typically fueled by a country's trade surplus, but the U.S. is grappling with twin deficits, a fiscal deficit and a trade deficit. For a U.S. wealth fund would likely come from borrowing, and that's where things get messy. Funding a wealth fund with debt means piling onto the national debt and increasing interest payments. Instead of paying down the debt, which offers a guaranteed return, you'd be gambling on risky investments. And let's be honest, the U.S. government doesn't exactly have a stellar track record of picking winners in the private sector. Plus, there's the danger of distorting capital markets. So, who gets the cash? Automakers? AI chip companies? If the government picks poorly, we could see more boom and bust cycles in key industries, destabilizing the economy. Worse, a sovereign wealth fund could stifle innovation. Handing companies a blank check, especially if the government just prints the money, invites wasteful spending. Funds don't always come with tight accountability. After all, this is why Trump's looking abroad for cash. It's tied to his reshoring plan to bring manufacturing back to the U.S. His latest target? Saudi Arabia. And just like that, he's cozying up to the Saudis, too. And we have great partners in the world, but we have none stronger. And no, nobody like the gentleman that's right before me. He's your greatest representative. Greatest representative. And if I didn't like him, I'd get out of here so fast. You know that, don't you? He knows me well. I do. I like them a lot. I like them too much. That's why we give so much, you know. Too much. I like you too much. To cement its position, the U.S. is leveraging its biggest edge access to cutting-edge AI chips. Clear lead over China in this space. And the Trump administration is capitalizing on it. Nvidia is teaming up with Saudi Arabia's AI startup Humane to supply 18,000 advanced chips for a massive data center project in the Middle East. This 500-megawatt facility will be powered by Nvidia's state-of-the-art Blackwell chip. This move signals a strong U.S. commitment to Saudi Arabia, and it's a growing headache for China, which continues to lag in chip technology. Expect Beijing to double down on its semiconductor R&D to catch up. AI chips are shaping up to be the commodity of the future. While energy sources like oil and gas drive production, chips are the key to amplifying efficiency, letting companies achieve more with less. The U.S. has the lead for now, but China has a critical advantage it can't afford to waste: a massive war chest. China has over $140 billion earmarked for its chip industry, while the U.S. is working with less than $35 billion. To make matters worse, Trump is pushing to scrap the CHIPS Act, calling it wasteful spending. Instead, he's focusing on boosting U.S. chip production through direct sales and encouraging companies to invest domestically. This marks a sharp contrast between the Trump and Biden administrations. Trump's strategy aims to cut the U.S. deficit while ramping up chip exports. The U.S. may not dominate in electric vehicles or heavy industry, but it leads in advanced chips, and it's using that advantage to court the Middle East. Washington is considering allowing the UAE to purchase over 1 million Nvidia chips, including 500,000 Blackwell chips annually through 2027. About a fifth of these will go to Abu Dhabi's AI firm G42, with the rest supporting U.S. companies building data centers in the region. This is a bold play to use AI as a tool for influence in the Middle East. Economic policy has long been a tool for statecraft, and this is a prime example. Trump is wielding tariffs globally and chips in the Middle East to assert dominance. For China, the clock is ticking. Beijing's only option is to go all in on the AI race, ramping up fiscal stimulus not just to boost domestic demand but to supercharge its semiconductor industry. The cost of borrowing in China is significantly lower than in the US. The yield spread between Chinese and US 10-year treasuries shows China can issue debt at under 1.9%. While the US faces rates above 4.4%. This gives Beijing more room to fund its ambitions, and its lower research costs could further close the gap. The path forward is clear. The US is pushing China to move faster. Beijing will likely flood its economy with massive stimulus, not just to drive consumption, but to advance its chip industry. The race for AI dominance is heating up. What do you think? Will Saudi Arabia really pour $1 trillion into the US? And will chips alone pull the Middle East closer to Washington? Drop your thoughts in the comments below. Stay safe. Hit that like button and subscribe as we navigate these wild times.